Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. I forgot to set up my microphone. How are you guys? Well, it's the 24th. And yesterday was a doozy to the charts. Where's my volume profile? All right, so yesterday in the E-mini, we were down big overnight and on the open, just an absolute whoosh, okay? But by the time we had left, it had recovered by quite a bit. So people buying the dip, as always. But then in the afternoon, it started getting a little cray-cray. I mean, I think that move was a little crazy. But all the way back up. I guess that down move in the overnight was a little crazy too. So maybe it all evens out. But I want to show you something. I have this indicator that I've kind of been messing around with. I think I need to make it a little bit less sensitive here. But you can see these little boxes indicate areas in which there was slippage in the index, essentially. And you can see that here around 3867 or so, there was significant amounts of slippage. And I've been doing a little bit of testing, and there is somewhat of a tendency to get stuck or come back to those levels. So we shall see, what happens. But that's just kind of one little thing I'm paying attention to. They are building some distribution a little bit above where they had been doing it the past few days. So now on the Treasury side, the yields are increasing again. So if yesterday was all about yields, you got to be a little bit concerned today seeing those yields pushing down overnight in the Treasuries. Or well, not the yields. The yields are pushing up, but prices in the Treasuries pushing down again. So that's a little concerning for our macro picture. Now, oil was also just a like, woo. So they had a pretty ugly number yesterday. I forget what number it was, but that pushed them down. And now overnight, they're coming back up and they're getting close to the highs again. So oil continues to look pretty strong. Gold, after having recovered the 1800 level, has been pretty quiet, actually, as has silver, although silver continues to have just a slight upside bias to it. And copper, as always, amazing. As always, that's the one. You go become a CTA and just be long copper. And that'll make your career right there, I think. Okay. Now, the dollar was getting, pushing down pretty hard yesterday as they, partially as they recovered, right? And now kind of flat, and now a little bit of a bounce here as the euro drops. So a dollar could still be an important factor here. Also want to point out the 6J here, really getting hit, and that's probably part of why the yields are being pushed. But the yen appears to be playing a more significant role than it has the past few months, which is actually kind of more what it's done in the past. But yes, what positions? Well, I just took three scalps. That little area that I was pointing out where there was the slips was I took one and I got a little bit out of it, testing the theory. But then I went and I back tested it. Oh man, let me show you the back test for this thing, because it was actually really interesting. Here it is right here. Well, that doesn't show you the stats. It shows you the equity curve. So of course, during the pandemic, it did like crazy well, apparently, because, that would have been getting hit like a trillion times. It does, it makes like one more tick, then it loses. And so that's how it's able to handle like, it's basically a 50% win rate, but still some profitability. But it seems a little inconsistent, don't you think? Like, here's this time period, it didn't do very well. But then here's this time period, it did really, really well. I mean, that's a great equity curve right there. And then recently it started to do well again. So it seems like it is something that does better when markets get a little bit more volatile, but I guess you would get more signals, so maybe that's why. I don't know. It's kind of interesting though, don't you think? We definitely might have something, and if we could add some filters to it, it might be better. I mean, the thing is that all I did to do this was see which way it slipped, and then take put a limit order like 8 ticks away, and then scalp it back to that spot. So that's why I say there's a slight tendency for them to kind of get stuck back into those areas, which coincides with, a couple of other things that I kind of been pointing out on the volume profile and stuff, right? If you wanted to monitor one instrument from each major market, what would be your choice? What do you mean? Well, the things that I show you guys in the morning, are really important. There's a reason why I go through all of those, because those are the things that I think are the most important. Actually, while I'm thinking about it, there's some things that we should go and check on the stocks, huh? Now, on this thing, I think I should make it more. So one of the things is that I can kind of set it to, still show the indicator if a price wasn't explicitly skipped, but it was just like not very many contracts traded. And right now I have it at 50, but I'm thinking 50 is actually too generous. So I'm going to change that to 10 and see how that changes it. Okay, so over here in stocks, ARK just got absolutely hammered yesterday. And I was just reading this morning some stuff about it. And apparently, well, TSLA is like a huge outsized position for them. And when it dropped on the open, they bought more. So that's probably a good part of why Tesla is back up. But that also kind of scares me. You know what I mean? So let's move. Can we move ARK up here? Yeah, we want ARK like a top. So ARK is up 2% overnight. MSTR is up 5% overnight. Oh, what's Bitcoin doing? Okay, so Bitcoin has pulled back to 5,000. Well, I still think on Bitcoin, who knows? Maybe this isn't the top, and Bitcoin tends to keep going. So I'm not going to try and make a call on it, but I wouldn't be surprised if it tries to keep going, because the crypto bulls think, it needs to reach this certain number that correlates with how much it ran last time. But I say, given what the New York Attorney General said yesterday, why would you want to be in this thing? Why would you want to be in it? So, but it did pull back. So it looks like that's why MSTR is doing a little bit better today. But GameStop and AMC down a little bit. So I want to keep an eye on that, though, because if ARK starts getting plastered again, because I'm looking at what the people say their moves have been, and it seems a little reckless to me. It seems like a, novice by the dip kind of mentality. But yeah, I think you want to have a watch list. You know, Gary Norton in his book An End to the Bull, he talks about you should have watch lists to kind of give you an idea of what different industries are doing and stuff. And I think that that's important, especially, you know, the major commodities for us in futures land, where we're primarily concerned about the macro forecast, right? I have to log into Twitter? How dare they? How dare they? Okay, wait, here comes the... There we go. Debating whether to do a you shall not pass for 1.4% 10-year, but I am not convinced that Gandalf can stop it. Ah! Oh, you know, I forgot. A big part of the rally yesterday was Chairman Powell's testimony yesterday, yeah? Seems to me that it was. So, I had kind of checked out by that point. I was like, oh, this is too volatile now. But he will be speaking again today. Bank of England Governor Bailey will be giving testimony. And new home sales in January. Fed Boehner, oil, lots of oil. 2-year bill auctions, Clarita, 5-year notes. So lots of supply coming in here. That might limit the movement in the 10-year. What a loop. MSTR buys Bitcoin. Tesla buys Bitcoin. Kathy buys more Tesla. MSTR buys more Bitcoin. Value added? ? No, it's not. Yeah, that's bad. When I see something go up, I'm getting to the point now where you know, I come in today and I see something move. And then I go and I see the news reports that such and such a fund bought this many shares of thing. I'm immediately like, oh, okay. I don't necessarily want to follow that move. I emailed CQG about a half a year ago asking if there are any plans to add more levels and market by order data. They said yes to both, but couldn't give me an ETA. Huh. Anyways, in the Ninja Trader release notes for the next release that's coming in March, kind of suggests to me that CQG has more than 10 levels now. So we kind of need to go and take a look at that. Okay, let's see. Oh, Blunt has responded to us. Yeah. Yeah, Splints, he's talking about Brandy in Motion, which I have, when I've gone through the technical analysis of that sort of thing, I think I've done Brandy in Motion one thing, and it's like, it's better, but it wasn't really making money from it, or it wasn't consistent. I'll have to look at that. He gave me so much information. I don't think that going through it here on stream would be appropriate, because it's Wednesday. There's another thing I got to point out is that it's Wednesday. There might be a lot of capital being put to work today. Well, I have a little bit of food here. Let me eat my croissant. Croissant.
HF says, hi Seth, if we were all to buy or sell at the same time, would there be an impact on the market, and do we get in trouble with the watchdog?
There would be. Now, whether or not you would be able to really see it on the DOM is maybe a little bit of a question. But let's say that all of us combined were able to buy 500 contracts worth right now. Yeah, it would move it. It would probably move it like 8 ticks, actually. I'm just kind of guessing, and I have that calculation up right now, but I'm gonna venture based on how much it's moving right now that about 500 contracts would move it. Would we get in trouble with the watchdog? Probably yes. So you cannot coordinate buying and selling with another trader, right? That's like how things like short laddering work, right? So that kind of manipulation, that's what we would call like explicit market manipulation. Now, if I come out and I say, hey, I really like X thing, and I take it, and then you guys all happen to take it too, that's different. But if I were to explicitly say, okay, at exactly 642, everybody buy the S&P 500, then that would be manipulation. So don't do it. We don't want to take a trade right now. Yeah, and that's what they really mean by market manipulation. That, or, spreading things about a stock that aren't true and that aren't true. Watch the 10-year one spot 4% presents a problem for equities. They're pushing down right now. I don't know. I mean, because there's auctions today. Lately, when we've had auctions, it has supported price in the treasuries. But the tendency is maybe a little bit down before the auction and then afterwards up. As they absorb the...
HF says why?
Why? Well, so if you go and you take the based on the standard deviation in price and the standard deviation in volume and the amount that you want to go, and the Kyle's lambda for that particular instrument, you can calculate how many contracts it would take to move the market a certain number of ticks, given linear impact. So it's a very inaccurate model, but for small moves that we're looking at, like 8 to 16 ticks, that's sufficient. And so I've gone through and I've calculated, and if you input a large meta order in the slow pre-market action that you have right now, the optimal number of contracts for you to trade like an 8-tick run is somewhere around 500 contracts. This is also why I've come in and I've decided that, I'm not going to get anywhere close to that. And people might consider, we'll be trading with multiple contracts and stuff. So I'm never going to give my indicator suite out to more than 200 people at a time. 100, 200. I might just start it at 100. So once we get 100 subscribers, I don't think we'll ever get to that point. But if we did, I would increase the price. And would we even get filled? Well, if everybody just put in market orders all at once, then you can just look at the level 2 and kind of judge out what that would do, right? But think about it. Like right now, 500 contracts would be a lot to hit the market all at once. Okay, so there's the Treasuries slipping through apparently 1.4%. Just getting that from everybody over the tweets that they just went through it. So do you ever enjoy trading NQ? Didn't we talked about that? You were here yesterday, Lewis, weren't you? I thought maybe it was a different person. And the equity is not so happy about that. In your face, Gandalf. New squawk, because they would drop through 1.4. I remember putting 300 contracts but didn't get filled and never showed up on the DOM. Oh, that's interesting. Okay, so they're going to step back a little bit, I think. So this could be difficult because the way that the Treasury moves is very different from the way that the S&P 500 index moves. And when you're looking for like when you can potentially have pullbacks and continuations and some, it's like almost the exact opposite. So just the fact that they moved up and held some contracts at 0.2 is a slightly positive sign. Of course, they took it off again, but especially if they were to buy it up again, that could be enough for a short-term pullback. It's called Sim. Mm-hmm. What I want to know is if I came through and I hit the MES with a 100 lot, what would happen? would an iceberg magically present itself to keep them in line? Okay, yeah. Let's see, so somebody hit with 1,000 lot into 0.2. 0.2 goes offer with a pretty solid offer, and now the equity is very unhappy about it. Okay. Well, that one didn't make a slip, but it was awfully close, probably. Look at that. Okay. Well, I think I kind of missed it. Yeah, Treasury's dropping there pretty hard now. Loss of volume there around 135, but then still aggressively taking it. Ouch. Wow, really? Too easy. I don't know about this. I mean, they are pushing it and everything, but there is some absorption there in the 10-year. No, I guess we're just doing this. Okay, so the 10-year is pulling back somewhat significantly now. Your Dom is lagging? No, it's not. Good morning, Popsy Pop. Oh, I didn't see you there, Uzi. You didn't say good morning. Thanks, friendo. Oh, jeez. Oh, this is one of my best friends, and I ignored him. Thanks, friendo. Wait, who are you calling friendo, buddo? Oh my gosh. Do you ever seen that South Park little bit where the two Canadians are arguing like that? And I said that to my wife once, and it like she had never heard that before, so I showed it to her, but she wasn't amused. I'm not your butto guyo. Okay, well, I doubted myself a little bit there, but I think that I read that action in the 10-year and was able to translate it to the trade in the E-mini pretty well. And also, good morning. Did I see Ace there? Yes, good morning, Ace. Story of a marriage, and she wasn't amused. What was the trade about? Well, we were watching the 10-year go down, and we were kind of seeing that the 10-year was going to have some struggles continuing to push, so we reversed it. Well, that one's not looking so hot all of a sudden, but yeah. My wife is not, she used to be very much a jokester, but, she's been, the thyroid thing has kind of made her not as funny. Oh, and there they flipped right back down to it very quickly, very quickly. The E-mini is handling it okay, though. 135 is not holding a very strong offer. Okay, well, let's get out of it. Since it's not doing what we want it to. Darn, missed it. Oof. Okay. How much money did you know what? You were a little bit too concerned about what I'm doing right now. It's only been like 30 minutes, dude. Hmm. I know, right? I don't know. This guy is a little different, but so kind of interesting that the 10-year. That was a pretty aggressive move down again at 30.5 in the 10-year. It's actually quite volatile here. But that time the E-mini continued down a little bit. And it's kind of in a difficult spot to tell. I mean, I think that the Treasury is still going to reverse here a little bit and maybe come back up to the like 135.02 area again. You mean trading correlations? Well, it's very much based. Well, correlation is a big part of it, yeah. Because we're watching the 10-year Treasury get pushed down and the equity index is freaking out because of it. But look at that. Now the S&P 500 taking another further dive, even though the treasuries are recovering. So now that correlation is kind of breaking down a little bit, it might be a good time to try and take a long. if we can find a spot where they chill out. Yep, like that. I should have. Well. Okay. Good morning, Keller. Well, I tell you what, this is a real brawl today. I mean, at points it runs, but yes, the bonds and ES are positively correlated. At the moment, they are. Usually, that's not the case. It does look like the bonds are going to recover it, though. It was more like 04 half that they initially pushed through, so that might be a spot. And there's going to be this gulf right here. What? Okay, so do you understand what the 10-year moving down means? So I'm a little taken back that I have to explain that, which is okay because we're all in a different spot, but that now I need to go back and try and figure out how much you actually know so that I can try and figure out where I need to start from. No. Okay. So the treasuries over here, when this moves down, that means that treasury yields are more or higher. Okay. When the the Treasury futures move down, yields increase. What that means is people have to pay more for debt. Okay. Now, all of these companies, they have a lot of debt on there. So when that yield starts to get too high, that's really bad for those companies, especially growth companies like Google and Tesla that carry a lot of debt. Okay. So when the 10-year Treasury moves down too far and that yield starts getting to a point at which it really negatively affects stocks, that is, bad for stocks. So that's why we had the Treasuries push through a particular level here. In particular, where all of the analysts were looking was 1.4%. And when they reached 1.4%, the equity indexes started freaking out. So in that case, they were positively correlated, in that the Treasuries moving down is bad for equities. Okay. Now, it is often the opposite, right? Equity indexes moving up means that the economy is doing well and that the Federal Reserve will have to raise rates. So usually they're inverse of each other. The equity index will go up, Treasuries will go down. So that is, I think, the full thing. Okay, so now the 10-year kind of retreating there. Well, they recovered that really easily. It's very... It's jiggling around a lot in the E-mini, wouldn't you say? Okay. You must be rebounding now. Like it does appear that way, but I think that overall the E-mini is probably going to recover. That's why I'm in. But it also looks like it's going to be a little volatile, and that 10-year could push back down really easily. So we really got to be on our toes. I don't think that I can just be like, okay, yeah, walk away, let it run. I know her. She can, those bids can just pull and she can be right back down there if she wants to be. This particular, I would just note that in the 10-year, this move, there was a decent amount of volume on the way down. Like look at how much we've traded here below 04, right? Like there's several thousand contracts at 10,000 contracts at every price. But what often happens when treasuries move down is that the bids just kind of jump out of the way and let it fall. That happens a lot on the downside in the 10-year. It's very frustrating. It's very frustrating when you're primarily watching for market orders to come in and then it moves with hardly any market orders coming in at all, right? So we got to be careful about that. We should come back over here, check on Kathy. Negative 0.43%. What's your premise, long or short? It changes every 10 seconds. So that one I took a little bit more risk and it didn't work out. So I think we need to relax for a little bit. Which account are we on here, by the way? Okay. Inside day possible? Yeah. Yeah, I wouldn't follow trades. If you're looking for somebody to follow and copy their strategy, you're watching the wrong stream. We collaborate. We have fun. But I don't want you to follow my trades. By the way, how's the robot doing over here? It's okay. Is he spitting out data for me? Yes, he is. Or just follow Ace. There you go. Well, Ace would probably be going long here again if he wasn't already long, right? Do you think correlations changed every 10 seconds? No. The correlation is still negative. Sorry, it's still a positive correlation. Treasuries go down, equities are going to go down. The issue with correlations, Pepsi, is that correlations oscillate. So if you were to watch the two instruments side by side and then had a line plotted of how much correlation was between them, you would notice that it will oscillate between high correlation and low correlation. So I will kind of watch when they're not very correlated and I think they should be, and vice versa, to kind of tease out a little bit out of it. Blah, 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 blah. This one is kind of hard because I was trying to catch like little bits, but you can see like it's not really working. So now it's like, okay, probably I need to take on a little bit more risk to work this out. But that's really hard because I'm not entirely sure if this is just going to recover or if they're going to go down again or what. So you can see that they're getting excursions and so forth. Well, I don't want to push it anymore. Let's sit and wait for the open because this particular area isn't being too kind to me. Need to keep this up. Okay, there's a bid there. You failed. You're running against him. Treasury, you see that 31.5 kind of pulling? So it can get back down there and then the 31 pulls, it can get back there really quickly. Bitfinex retreats, trolling McTrollface. Bitcoin bag holders have figured out that if they convince Saylor he can move Bitcoin higher by borrowing enough, they can sell him their Bitcoin. Yeah, maybe. Maybe that is what's going on. See, I'm not really getting... I don't know, man. You don't look as excited as you did in your thumbnail. Yeah, when I'm trying to be focused, it's a little different. It's hard for me to turn over and read things, so that's one thing. Sailor Moon is just a cartoon, not a person. What? This whole time. I've never really watched that show. Yeah, they're back down there pretty easily, right? So now what does the 30 do? Does it hold or do they level break here? Ooh, she's setting it up. Could do. This is a 50-50. Oh, man, look at that. That 30 is pulling way too easily. Yeah, I don't think that 30 is the low of the day. I couldn't just hit into it, but yeah, they're going to trade 29.5. Oh, okay, there is some iceberging there now. Maybe I'm wrong. A little bit of iceberging at 30. It's 3,000 isn't like the end of the world, but okay. So they got through that and holding an offer. Yeah, it'll take a few times. Okay, now they trade 29.5. There you go. Kathy now down in spot 88%. I'm a little concerned about that. Like, sometimes you get this thing where even though there's stuff moving in the index and everything, some of the important individual stocks don't move that much pre-market, and then the open comes along and they just get trashed, you know? Rabobank, the Greenspan put will become the Greenspan push due to soaring food prices. You say 600 is the key. Well, they're at 700, so. Hey, you can believe that they came one tick short of filling me. Okay, well, they touched 29.5, they touched 29, and now back up 3 ticks. And that 3 ticks back up was on almost nothing. What? Oh, by the way, are we getting steeper? Not really, actually. Definitely in 2s and 10s. The other ones was a much more steepening in the overnight than it was just now. There we go. There we go. All right. Okay. Still got 5 minutes to the open here. Ooh, I don't know, guys. Kathy's now down 4% overnight. Tesla's actually positive, though. So there's that. VIX is definitely up. What's flushing in the pre-market? Apple's down. Tesla is up, but Apple is down. Not very often that you see them on opposite sides. How many trades on average do you take? It depends. You know, when I'm the more trades I take, usually the worse I'm doing. So, you know, an active day, it's maybe a dozen, 2 dozen. But if it's a quiet day and I'm doing well, it'll probably only be like 3 trades. Okay, so there's a pretty big iceberg there at 62. Them reacting to that. I'm scared. Yeah, so less is better. Yes, less is definitely better. Well, yes and no. Kind of. That's a complicated topic. You know, like when I do my systems, one of the things that you'll have a hard time with is getting, you know, something that has a high probability but takes enough trades. One minute. Yeah, that little up move, that last up candle was definitely because of that iceberg that happened down at 38.6250. But we'll see what they do on the open. The 10 years are still hovering down there at the lows, right? You can pretty much put everything in 1 to 2 comments. What do you mean? Oh yeah, Vlad maybe sends too many messages. You should put them in Discord. I'm telling you. YouTube is for fun. Okay. So pretty mixed volume on the open there. A small push up, now a small push down. We'll zoom in on our Tesla here. The treasuries are pushing down again. Really? You sure you guys want to do that? Okay, so that stopped me out at break even. I don't know about that one. That seems a little bad. Yeah. Holy shnikes. That's a little crazy. So now my DOM is lagging a little bit because of my processing power. Pump and dump. I don't know. That it was strong volume. They're hanging out up there still. Tesla's going good. ARK recovering its losses. There's definitely some distribution here around 74. You read it wrong as dump and pump? Well, usually if they're going to pump it up like this, it's going to last more than 5 minutes, you know? But most of these stock names are looking pretty good at the moment, right? Tesla's up 3% and ARK is now positive. But like them treasuries. So it would be a little unusual for them to just completely ignore what's going on here in the treasury, you know? Now, the issue is that probably the retail traders ain't able to watch that. So, like, if something happens, you know? You know what I mean? Who ends up holding the bag? Yeah, okay. Man, Tesla's so volatile. Okay, so some absorption there. Actually, a lot of absorption there. But look, oh, that broke hard. That's going to be ugly. That's going to be ugly. Whew. Yeah, this is going to turn into a dumpster fire now. Out. So I'm seeing some big meta orders going both ways, and that's why I'm jumping out. Maybe should have held that, but that one was good. That put us in a good position. The bond vigilantes have returned. I don't know if we're quite to that point yet. Well, I do think that there's a good possibility of even lower here. There's just a lot of distribution and fast, furious action with really large meta orders coming in that area that does not make it a good location for me to try and hold it through. It's frankly, it was, oh, look there, it's a pretty good move up. It's frankly a spot where I would be trying to reverse. You just got a martingale. I don't know. Did you see how the funny thing is? The funny thing is that I kind of reduced my risk on that one, and that was the one that really ran. If I had taken 2 on that, it would have been. Well, I think I did put an order out and it didn't fill, but. Really, like those 4 trades that I took earlier that didn't work out, really should have just backed off of that earlier than I did. Well, the Treasury pulled back really, really hard that time, didn't it? Asia was down big because maybe Biden not taking off Trump sanctions. That was a good observation, Vlad, that I missed. Yes, I read that one in the thing. Them saying that they might use some of the Trump era laws to kind of push them. I think those were just suggestions, though. I don't think that the Biden administration has a really tight, well thought out strategy on China yet. They kind of want to be nice to China, but now that they're in power and they're getting all of the intelligence, they are also kind of being like, well, we can't really. They're not being very nice. Another reason is because newbies. Well, it's kind of funny. Bitcoin going when it has, because usually the period between, our New Year's and the Chinese New Year are very poor times to be in cryptocurrency, right? By the way, Bitcoin is still kind of pointed down, but not doing a ton yet. I just really want to see it just go down to 4,500 and break it, and then all chaos breaks loose. And maybe if Bitcoin was to crash, then maybe Ark and Tesla would get dumped on. And okay, well, Tesla, it's kind of sitting there on the bottom. You think that they'll break through the bottom of this? Yes, they did. All right. They touched it. They didn't go through. Yeah, they did break a new low in Tesla. It's not like just careening through it yet, but it doesn't look good, does it? Definitely doesn't look good. This is Sparta. The real support is 38 to 39. If it breaks that, you need to decrease your position. Yeah. Well, I was just looking at 4,500, just kind of thinking about how many people are in from 4,500 to 5,500. There's a lot of positions stuck there, But then you're right. It's kind of, it just kind of needs like another step, another step, another step, another step. Then one of the things that you kind of want to see is like weak structure. So like if I have a big meta order down here and there was lots of buying and then it goes up, then when it comes back to that area, they may go through it, but like, that kind of ends up being like support where, another large meta order might come in and save it and bring it back up. But when you have something where it just, there was a big meta order, it went up and then it went up again on nothing and it went up again on nothing, you have like this really poor structure underneath of it that it can just completely fall right back down through. And in Bitcoin, it looks like a really incredibly weak structure. Like you've got a lot of people long and they bought it on margin and there's not going to be more money to come in. That people keep saying, oh, all of these companies are going to buy Bitcoin. But you know what? At the top of every cycle, there is something they say, this group of X people are going to come in and buy, and that's where the next run is going to be. And then it never happens. And I really think that that's what it is with this one, because they did a survey of money managers and basically all of them said money managers for like corporations, and pretty much all of them said there's no way we would do it. So I don't think that that's going to come through. And we were overbought. And you add on top of that the New York Attorney General news basically confirming everything that we've thought about Tether and preventing New York clients from being able to get into the market through Tether. I don't think that it looks bullish in Bitcoin, put it that way. But Bitcoin has a way of ignoring reality, right? Our market needs to distribute in order to have a healthy trend. Yeah, and one other thing that I would really, gosh, when I was saying, like you get this poor structure underneath the view, what if you get a move up and there's a piece of news, and so you have this huge area where they didn't do a lot of trade because market makers pulled and it pushed through on news. Does that lead to a weak structure underneath? I don't think it does. So here's a case where when you're looking at a volume profile, like you need a lot of context. Okay, well, the S&P 500 is pushing back towards the high of the regular session, but Tesla is still struggling a little bit. What is Bitcoin? I know, right? That's what I should be saying. But what? Governor Bailey, first quarter of 2021 will be considerably more negative than expected. The rising equity bond correlation, balanced mutual funds will be a major risk factor. Oh, yeah. Oh, that's such a good point. And that is a really major section of the market that is just going to get pummeled by them both going down. Yeah, context is king, but 95% of volume profile educators out there just say, buy if it touches BOZ. Yeah. Because the way that I look at it, here's the thing. A lot of contracts trading in an area means nothing. Why did it trade a lot of contracts in that area? Was it because they really wanted it? Is it because there's a liquidity hole? Is it just kind of a random chance because it was really volatile that day and it crossed that area a bunch? It's just like, it's more complicated than that. And what I really look for is, large meta orders move the markets. And so when I'm looking through on that chart, I'm kind of trying to figure out where were the large meta orders and what happened and why did they occur and so forth, and making my analysis on that. And so I know, if I get a large meta order and moves us up, and then I get a large meta order of equal size going the other way, it usually breaches below where the first meta order was. And then you kind of have to think about, well, why did the first meta order get in? Did they not want to be in anymore? And then you get, a meta order going down again. And so then that's where you can get like really big pukes and stuff. You've got 2 points on that. I don't know. This is maybe one of those days where maybe the target should be a little further, huh? Because they're moving like 5 points at a time. Oh, yes, that's right. We get new home sales at the top of the hour, right? Yes, that's right. New home sales. We're looking for a reading of 2.1 month over month versus the previous reading of 1.6. See, this is exactly where I'm getting at, though, Kyle. Kyle says, I don't think it means nothing. Market's primal objective is to facilitate trade. These places is where market was efficient in doing what it is meant to do. That's not necessarily true. Sometimes a lot of volume can trade in an area because the market was very inefficient in that area. There's not a lot of liquidity in that area, and so it prevents them from getting away from there. Like, they don't want to trade in there. It's not like it's the reason it's facilitating trade in that location is because the latent liquidity isn't there. Oh man. Well, Ace, we need to build you a new machine. And just go through and we'll tell you what to buy and you come over. Or I'll come over and we'll build it or something. Okay, well they have traded on both sides of this open like 6 times now. Sweden, with no lockdown and no masks, achieved status of being one of the best performers in Europe for minimizing excess mortality. The real metric, the crucial metric, so no matter the lies, deceit, and blah, 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 blah. That's interesting. It's at those prices that algos provide. Well, yeah, means nothing for the purpose they don't want because of price and liquidity. If a volume got traded there, it's because buyers no. So let me see if I can find one. Let's see if we find one. Well, okay, so the 29 half, probably a good example. Let me draw it instead of trying to use an example of something that's going on right now. Okay. In the 10-year Treasury, you're going to see something like this. You can see 3,000 contracts sitting here. You can see 500 contracts sitting here. Or blah, blah, blah. Let me do that again. You can see 3,000 here. You can see 500 here. And you can see 3,000 above that. Okay. So what is going on right here? Why is that so low? This is the question. Well, usually it means that the liquidity already pulled or they already bought people there, right? So typically what we want to see in a trend is they will buy these, they will stack, another 3,000 here, and then this guy will pull and he'll be 500. And then they'll buy him and it'll move up and it'll move up, right? The buyers want, the market buyers, they want it. It goes through, right? Okay. But what happens more often than not is they'll cancel out the 500 and then they'll put 500 on the bid and then nothing happens. And so then, somebody decides to sell into that, and then they put the 500 up again, right? And then they just go back and forth in that location. So what you end up with is this time period where they've traded through this area right here. They've traded back and forth across this price dozens, hundreds of times. And each time that they did, there was only 500 contracts that traded at every time. So why did it trade in that location so many times? So was it because that was where buyers and sellers agreed? No, I don't think that is the most explanatory way or that's going to tell you the most about the market. What's really going on in that location is that there's not very much latent liquidity. There's only for several, for a long time period, there's only ever 500 orders of latent liquidity in that area. And nobody wants to buy into this or sell into this because there's no real reason to. So what this really is a hole. This is really a hole. And then you get all of the people that they don't necessarily want to trade in that location. It's just like they have no choice. So you get this thing here and the sellers here. And in the end, you'll get the volume profile shape that we see, like we see at the open. Right? So that's where I really think that you kind of got to keep in mind why it was in a spot or it wasn't. You know, because a spot could stick out in the volume profile because there wasn't a lot of latent liquidity there. It could also stick out in the profile because there was too much latent liquidity there, right? It's kind of funny. If there's a really big iceberg, that kind of keeps price in place and keeps it there for a while and leads to a lot of volume. If there's not a lot of liquidity, that also kind of keeps it in place and prevents it from going very far, right? Let's try an experiment, go along. Well, it is coming back and forth a lot, Ace, isn't it? But I think that the market does react to what we do. I don't, it doesn't take much. That's all I'm saying. This is why, you could go in and you could say, okay, like the trend seems to be down. I can kind of take one here based off of this. But if and you can just kind of manage it. You can say, okay, I'm going to take one, and then just kind of like, if it goes, it goes, and if it doesn't, then I just take it off, right? Like sometimes I do that, but I think the reality is that because the market, every order impacts the market, you really truly have to have like a real reason that is going to move your way. Yeah, that's where we converge. So that's just where I'm saying, when you look at the volume profile, where the lots of volume was, we kind of have to remember why. What is a meta order? A meta order is a large order that cannot be executed all at once. Okay, so if you are a big bank and they come in and they say, we need you to buy 1,000 lots in the S&P 500, are you just going to come in with one big market order and just buy them all? Right? They say you got to buy 1,000 contracts under a price of 38.70. Right? I suppose if you were risk adverse, you could just buy it all now, and you could get 1,000 contracts all below 38.70. Right? But would you really want to do that? Probably not. Probably not. Probably you're going to split it up, right? So remember, let's go look at dictionary meta. Meta. It's self-referential. It's kind of what it means, right? So it's an order. It's a bunch of smaller orders that those together make up a large order, right? That's what we refer to as a meta order. It doesn't necessarily mean that it's like a block trade or anything like that, because it could be a bunch of different things, right? Because we could come in and we could say, everybody that trades the cross of a 10-minute moving average is one meta order that trades that. And we can come in and we can look at it and we can say, okay, when that happens, how much volume comes in? How much volume comes in there, right? And say that's that meta order. And then we can game it out, because there are ways of calculating the optimal number of contracts to trade for a move of a given degree, right? So let's go and look at that. I'll come in and I will create a new chart. Since I'm not interested in trading this right now, this is just like a complete mess. Let's do a 5-minute chart, okay? So there's a way of calculating. I'm giving you, man, I shouldn't be telling you guys this stuff. This is the stuff that I'm not supposed to tell you about. How many people do we have on here? 44. Well, I started already, but you're like, pay attention. Pay attention. That's something called the Kyle model. The Kyle model, this was developed in 1985 and is the basis of the majority of market making algorithms. And they come in and they decide, If I think it's going to move up 8 ticks, what's the optimal number? Or I know for sure it's going to move up 8 ticks. What's the optimal number of contracts to trade on that, right? So we call this Alice. Alice is the person that's going to buy it against the market maker, right? So let's just use a small period, and we're going to use an 8 tick target right now, right? Just be careful. Well, it's not that I'm going to get a lawsuit or anything. It's that I'm giving you like good information that I don't necessarily want everybody to know. Okay, so there you have it. So what is this telling us? This is telling us that in this tight action right now, that you could potentially trade 7,000 contracts for a cross. Let's come back and change it to a 1 minute. And let's come in, we're going to do, a potential signal. I'm giving you something that, like, this is a signal that doesn't work, okay? Not on its own, at least. But the market does tend to react to it, okay? Oops. That was not what I wanted to put on there. I didn't want to put an RSI on there. What am I thinking? I want volume for one thing, is what I want. Volume, where's vol? Vol. And I want SMA. Where's the SMA? SMA. Oh, there you are. Hiding right underneath of my cursor. Okay. 10 minute moving average. Okay. Now, here was a bar. Look at this bar right here. Okay. So again, our Alice here is telling us, based on the volatility, well, it's kind of decreased because I changed it to a 1 minute. So let's change that. The time period that you're looking at kind of matters too, but we'll do a 10 minute. Okay. So this is saying that 1,000 contracts would be the optimal number of contracts to trade that particular signal. And how many contracts traded in that bar? Over 8,000. So, well, now let's try and take it down into a more granular level. 1 second. See what really was happening. We'll bring that one down to 1 second. We'll add another data series that is the ones, the bars behind. Okay. And these ones will be 1 minute. Okay. And we'll use the multi-period candles. Dun, dun, dun. Okay. Alt. Gotta move it. Which one is it? There we go. Okay. Multi-period candles. And it will come back and we'll change our moving average to make sure that it is on the 1 minute. Okay. Okay. There we go. Okay. So here, for instance, price crossed the moving average. Okay. How much volume was trading through there? It was about 232, 329. And there was this really big one. So it seems like we're doing okay. But the way that I'm probably thinking about it is this. I'm probably going to have my little thing over here, and I'm going to say I'm going to get in and I'm going to watch how many contracts trade. And when I see that the number of contracts that have traded overall, is it the top one, I think? Right? Is 1,000 change in delta? That's a problem. That's a problem. the higher your time frame, the more time you've got for the thing to go through. So that's why. Now, there's some things about what I'm showing you that are inaccurate. Okay, just to be clear for you, like I'm using the standard deviation of the price and the standard deviation of the volume, which is not really going to be like a super effective way of applying it to that model. As we can see, it changes when we change what kind of bars we're talking about. And there's a lot of math in there and everything, but the point is this: you can literally calculate how many contracts you want to take. And if the number of contracts that are trading in the market is more than the optimal number of contracts that you would want to take on that signal, then you have to really think twice about taking it. And right now, because it's so tight, we're kind of in that situation. Okay, I did something to my my headphones here. What the heck? Oh, that's no good. I'm gonna have to go and get a new cable. Oh, that's gonna drive me crazy. Why all of a sudden I can only hear out of one ear? Have you tried 6-hour timer? Yeah, I've never tried that. That's interesting. Anyways, Kyle Molly, you can go look it up. He wrote a paper in 1985. And it is the basis of market. Now there's an inefficiency in it because it uses linear impact, not square root impact. So it's not everything, but there's a couple of really important things that we learned from it. And one of the things that we learned from it is that every order does impact the market. And you know what? If you take a signal and more orders get in on that signal than we're supposed to, you kind of have to wonder, right? Like it might flip back on you. Oh, this is gonna drive me crazy. I'm gonna open up a song here and try and listen to it. It was just fine yesterday too, and I didn't do anything. Where's the shorts? I guess I'm just screwed. I guess I just need to go and find a new one. 'Cause it is not. I don't know, man. Sucks. Oh, it sucks. Like hearing only out of one ear, it's driving me crazy. I hope it's just the cord. Are you a pro with a Bloomberg? No. I did work for a large bank, but I didn't trade at that large bank. But that did kind of give me a lot of hints about where I should look. Oh, same here. That's cool. I worked for all major banks in the West. Oh, really? I did one for, how long was it? from 2010 until 2016, 6 years. Man. This is killing me. I forget what are the name of these headphones. $2,000, that's right. HGJ 2000 cord. Forget what they call them. Should I get the one that's like a braided cable? Or should I get like a coiled one like that? Yeah. How long is it? 4 feet. To 15 feet, that's too long. I only need like... I don't know. I do kind of like it when it's kind of like, you know, because once if you start walking away with it on, 4 feet is not long, yeah. But look at how long this one is. Well, how long is this one? Yeah, okay. So this one is 4 feet. Corded ones are bad for headphones? You mean the ones that kind of twirl like that? New Fantasia. I think I got one like this. Corded ones are where the cable is textured. Well, no, it's going to be for replacement for my headphones that I'm wearing right now. So for this. Because there must be a short in it somewhere. So when I move it around, nothing changes. So I hope that it's not just that this died, you know. That would be awful. But get a wireless adapter? I could do that, but I just have these nice headphones that I've had for like, you know, years and years and years, since 2010. So for 11 years, I've had these headphones. Coiled are heavier. Yeah, see, here's the coiled one. Well, this one is coiled too. Oh, maybe it's not. But this one definitely says that it's coiled. That is not the Mini XLR, though. Mini XLR. This right here. This is a little teeny tiny one that's 1 foot. I don't know. I think this one might be the best choice. This is what it comes with. And I kind of didn't like it when I got something different. Now I'm not sure. Because, like, if you start walking away with them on or something, you know, you kind of can tell before it really rips it off your head. Well, I could try switching. Oh, except for that, I don't have... It's fine, it doesn't matter. By the way, we haven't gotten any events today. Is there something wrong with my thing? Let me refresh this. Ooh, and we still got an hour before we can do our data analysis. At the top of the hour, we're gonna do some R, I think. Loving silver, holding support. Well, it's interesting that silver took the dump there, huh? But it's those yields. It's kind of funny that it's like the narrative is inflation narrative and that gold and silver should be good about that. But then every time that the markets start being concerned about inflation, yields rise and it hurts gold and silver. Oh yeah, I was just waiting for it to finish here. Okay, yeah, no, it says that it hasn't had any. So despite the market being very going all over the place, frankly, we got a pretty good liquidity in this market today because we haven't had any of those little slips. Man, I don't know what happened, but it is driving me crazy. Holy crap. It's okay. If I give my wife this one right now, how long was it? 4 feet. Sure. And you just have a little bit there like that. Sure. Okay. This one lasted a couple of years. Ooh, you can now message people between Facebook and Instagram. Okay, cool. If you get a wireless rig, you can hear us talk to you in the bath. Nah, I'm not going to do that. Those are, I don't want to spend that much money. If I'm going to spend that much money, I'm going to get a lavalier microphone for you guys so we can do the videos in front of the chalkboard. Hope they dump it like this. I don't think that they're going to. I don't know. It looks like, you know, the Treasuries had a risk move below 100 or, you know, 1.4% yield. And sometimes it will do that where it'll go below it and everybody jumps on it and it's crazy and then it recovers back and it's fine. That very often has what happens when you get a move beyond a critical level on the Treasury. How's this thing going? How many trades has it taken? 48. Well, you know what? Let's do it. Let's do it. Come on, show me the trades. Yes, okay, cool. Export. J. Replace, yes. Output. Yes, very good. Copy. I'm gonna show you this is top secret stuff again. I'm showing you too much stuff today, guys. This is actually top secret, but... So here I've exported all of the trades that robot took today. It's about 50 trades, which is way too many. I'm going to make a new spreadsheet, and I'm going to paste the data that it's been spitting out. And then I'm going to go to data and text the columns to split it out because I have commas in there. There we go. Okay, so there's the commas. And expand that a little bit so you can see I give each trade is spitting out the name of a different name with the current bar that it was so that we can name them all, right? So then I can come over here. Oh, this right here, this market pos, we should just say direction because R doesn't like spaces in names. Anyways, so this one is going to be min and this is going to be max, okay? And then this is going to be equal n lookup. What is it called? V lookup. Yes, that's right. V lookup. And then the table is going to be this. Comma. Oh, wait. I forget what is. Oh, the lookup value. That's right. We want the lookup value, which is the entry name here. Comma. Table array. Comma. Call index number, which is 1. And then 0 for it to be an exact match. Ah, spill? What does that mean? Or maybe it's 0 indexed? What does that mean? Oh, it returning multiple results? No. So let's try opening up a previous one. This one. No, that's not it. Don't save that one. No, come on. There we go. Oh, I see. I see where I made my mistake. Okay, so then I'm going to come in and I'm going to say this, comma, this, comma, 1, comma 0. There we go. Except for that, in this case, the column that we want to get is the second one, I think. There we go, 3728. Yes. Okay. And then we're going to copy that. We're going to put this one here. And that's going to be column 3. There we go. Okay, so now we just extend that down the line. Very good. Very good. Very good. Okay. So now we've got these values for all of these trades. And we're going to save this. And then I'm just going to pull myself up here. We're going to open up R. Locking in 5 points plus a commission. Good job. Well, the Bulls did win. They made a pretty good excursion there. Yeah. Okay, is this the one that we want? Yes, it is. Okay. So I got this script I wrote a long time ago. We're going to say J. And then I'm going to have to... okay, so I need to take out 5 of these. 1, 2, 3, 4, 5. You have to tell it how many columns there are and what column types they are, which is kind of lame, but... "40 observations of 17 variables." So that's exactly what we want. And then we're going to come in here. Actually, let's clear the data out. Clear objects, yes. Just make sure, do these 3. There we go. So there was 28 longs and 20 shorts. Very good. Min and min. Oh, that's right. Okay. Max and max. So now we plot these first 4. Should get... oh, okay, let's see here. No, I did not like it. You may have printer errors. Now, what is it saying here? Remove 28 rows. Warning. Remove 20 rows containing non-finite values. Stat density. Well, for one thing, I don't need that. Okay. Mins and maxes. I don't think that that's what was causing it, but... that's not a weird error. It says you missed the close parentheses. What about these ones? Do these ones work? Okay, wait. I forget the line. What is it? Let's clear everything out again. I really thought that I would come in here and it would just work. Okay. So, like, the data is there. There's definitely more likely to be... Well, have they all been like that, though? Have any of them been positive? None of them have been positive. That's interesting. So there's been quite a strange... disconnect in the book, I guess. Hold on a second. Guess I'm glad I started this when I did, because it's going to take us a little bit. I guess so. Because there's just been those big orders there all day. Okay, let's come back over here. Let's just clear all this out and only try doing the one. I don't remember what the tit part is about. Then this one doesn't work either, huh? There's 1, 1, 2, plus that, 1, 2, 1, 2. Just for the record, this error was related with a specific column containing only NAs. Oh. Okay, so wait a second. When we come over here and we look at the names of them, no, it's capital M? Huh. Direction, min, max. I don't understand. Let's just try renaming them. after I run in that whole bit. Okay. Run. Urgh. Okay. Back to Stack Overflow. Oh, wait. Fill equals profit? Was there another? Oh, yes. Oh, why is it like that? Wait a second. So, yeah, why is it like that? That's what, okay, so that's what's causing the error. Is that profit as ending up with NAs in it? Why would that be? Hmm. Okay. I got it, guys. Oh, did I not? Did I close? I better didn't. I haven't closed that. I think it's okay. Ah, fetch. Okay. The reason it's happening is because it's not a number. Oh, so why? Oh, because I bet you that if I go into shorts here, it's saying that that's a character column. Yep. See, I need to change this to be, you know, why is the profit target only 890? Oh, yeah, because that's a winner or a loser. Okay, so if it's this, I can just say it was negative 16. Eight. Oh, that one's negative 16. Streaky, wouldn't you say? Save. Okay. Clear the data out. You run all of these. Ah. Ha. Now we get the pictures. Okay. So, interesting. Phew, glad you explained that. Awful boring, but look at what you're getting. So it's been taking a lot of trades to where the book was like negative 9,000. That's kind of interesting. And we can look and say, oops. Okay, yeah. Book one. So these are the shorts and these are the longs. And you can see that they're pretty strongly distributed down here. But when you go long, the more negative it is, the better. And when you go short, they're about equal. But when you go short, when it's above that 8,000, it's better. And then if we go on this other one, the other metric, it's similar distributions. So first of all, that tells us that my min and max functions aren't all that different. So maybe I should go back to, I think that I should go to the original algorithm. Yep, I'm gonna have to go back to the original algorithm on the max. Because I don't think it's really telling us a whole lot. Today, it also says today is probably not a very good test case because the book has been negative the whole day, which is to say the book has been bid all day. Just remove him, dude. You just listen. I have a zero tolerance policy here, man. Maybe he is like genuinely trying to learn, or maybe he is Salim. But either way, you come in and you start insulting people and being irritating, and I'll remove you. You remember that being annoying is a capital offense in my channel. And if you are distracting people, then I'm just going to straight up remove you, because I'm under no obligation to be nice to people. I don't give a shit if I'm like hated because I'm too strict or whatever the point is. We're trying to accomplish something, collaborating and trading. And if you're doing something that is, if you even once do something that detracts from that, I'm going to remove you. Period. If being annoying gets them banned, then how the hell am I still... You ask good questions. Do you see the way that he was doing it, though, was like demanding. It's very demanding, and it was always at a spot when he shouldn't be asking, and then he started asking dumb questions. Like, I had to explain things way further than I felt like you would necessarily would need to. That's why I was a little suspicious that it was Salim from the very get-go, but but then he started doing the same to Ace, and he started insulting Ace, then obviously it's Salim. No one is more annoying. Now, what's annoying is you're getting in a trade and somebody's yapping up and down. Why did you do that one? What is this? Like, keep up, bro. Salim is like, come on, you know who he is, bots. Oh, yeah. I mean, who is that? I don't, all of that stuff I said, I was just being crazy. I don't know what I was talking about. Seems to me that I should just that today I should have just only done longs, right? So if we done longs, we would have done 28. And we would have gotten a win rate of, 28. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So that wouldn't be a very good win rate, though, would it? A runner a day makes commission a non-factor and bears one. Yeah, well, you know what? I got stopped out a bunch. I mean, look at my results today. Those first viewed weren't really working very well, were they? But then I got a really good runner. Maybe some people are trying to follow trades because they don't have their own style of trading. No. If man, so forever, really, you've been here around a while. So I'm kind of surprised you would say that, but that kind of triggers me. If you don't have your own trading strategy that is thoroughly, tested and has an edge, you shouldn't be trading. And you should be in development phase again, right? You shouldn't be following other people. And that's the thing is Ace, if you're really nice to him, he might be willing to share with you how it works, how his edge works. I'll tell you, I don't know if you'll be able to trade it as well as he has. That is my point. Oh, okay. Yeah, I just... that's what I was saying. It's like, if you're looking for somebody to follow with their trades, like, this is the worst. This is not... We're explicitly against that. And you can see, why do I show you guys this stuff? Like this one with R in particular. I'm showing you guys this so that you can do it yourself. So that you guys can program stuff and we can go back and forth and show each other things that we've written and share, right? In private, of course. That stuff I don't put on the channel. But there's a lot of stuff going back and forth in PMs and helping people develop strategies and stuff, and then you can use them. Like, you should collaborate with people, but you don't want the whole world to see your strategy. I'd rather mourn missed out money than lose, actually. Well, it all depends on if it was a execution, you know. Like if you really should have gotten out there because you got an opposite signal or whatever the deal was, and your plan is that you should get out there. You know, if I'm in a trade and I see a large meta order going the other way and I don't get out there and then I lose all of my profits because of it, then I'm absolutely going to mourn that because I didn't trade my strategy the way that it was supposed to. I'm kind of wondering if today was just a fluke day. I was talking about failed technical patterns. Let's see. Oh, the equities channel. Equity indexes channel. Yeah. Oh, that one is a great one. I didn't even notice that. But that action in the open looked like a head and shoulders, and then it went down and it failed and it bounced back up. And that's actually probably a pretty good explanation maybe for what happened. That's exactly the sort of thing that I'd look for, yeah. Then comes the follow up, and yeah, don't tell them how it works. Don't tell them. Are stochastics a momentum indicator? I mean, it's really more of a mean reversion sort of a strategy. There is something to it in that you'll come out break even with stochastics. Like you realize that like people think, oh, okay, it's break even, it doesn't work. This doesn't mean that it doesn't work. That means that there actually is some real statistical sound logic behind the trade. It's just that the market is efficient. That's why you kind of have to go in and dig in for an inefficiency that people aren't looking at. MACD. So let's see here. How did our robots do? Indy did not do well at all today. Yeah, that's what we should expect, though, right? But Brandon, he got something pretty good in the end. So I wonder if the data set that we've got is just a bad data set. Because, I mean, if I only took the longs, it would have worked, right? Because you come back over here to shorts, right? Only took shorts. So there was 20 shorts, 1, 2, 3, 4, 5, 6, 7, 8. 8 of 20. 12 out of 20. 60%. So it kind of comes out to the same. Yeah, I don't know. Because when I was doing it the other day with the filth on, it was like 80%. I was like, well, that's freaking awesome. My first course in 1994, I paid $4,500 to learn how to use this stuff. Oh my gosh. That's terrible, dude. Well, it just goes back to one of the things like once, just, you know how they say once you're aware of something, you'll see it everywhere. You'll start noticing it every time. So I am obsessive about reading Reddit and all of the forums and seeing what people are saying and all that stuff, right? And trying to backtest strategies. And one of the things that I would always do when you look at a strategy is like, where did it originate from? Like when was that, if it's a bar type or an indicator, like who invented that indicator? When did it first become a thing? And you will find that the vast majority of things that retail traders are trying to do are things that are 30, 40 years old. Things that are older than me. And you kind of have to wonder if the market is efficient and arbitrage is a way edge. Oh, what the fuck? Okay, hold on. I want to focus again. That was something else. You know what? I should have kept backtesting it, because I should have let it just keep doing data, because it's changed back the other way now. We were really green back then. Anyways, how are you going to be successful with a strategy that's 40 years old? Hey, good morning, Win. Well, it didn't turn, so I guess I got nothing. You know, I'm really disappointed that my little sound thing didn't go off today. So even on that one, we didn't get a limit. We didn't get a slip. Or maybe I need to change it back to 50. Well, I'll give one thing to the educators, that what they share with people is way more sophisticated these days. Yeah, I'm gonna have to backtest some of the stuff that Blent was sharing with me today. So one of the things that he pulled out, I think, it sounds close to something that I was looking at, but I've had trouble getting to work for some reason. He doesn't trade. He doesn't take trades. I don't know why. Well, I come over here and look at my robot accounts. Yeah. Which one is on 101? Indy. Yeah. Indy is the one that sucks. I think Indy is like a great trade, but it's like doesn't work. I wouldn't think that math goes bad with age. I understand that mass exposure to strategies can tear the strategy down, but I see math-based indicators as more of a tactic than a strategy. Well, it's the issue is that most math-based strategies are based on looking for a deviation given a Gaussian distribution that is not accurate to how markets behave, first of all, especially not price. And then I think that the second issue that they suffer from is that they're trying to make decisions. It's like you're looking at this teeny tiny little piece of information and trying to say this is what's going to happen. You know what I mean? Like what would be a good what would be a good comparison? Trying to predict the direction something is going to go based off of only one piece of information. I don't know. It's like trying to determine what direction a person is walking, only watching their hand, you know? Only knowing where their hand is in position in relation to their body doesn't really tell you anything, right? Wish you were still long 78. Well, that last little move there was a little crazy. But this is the, so 0.4 they are basically, the treasuries are above the 1.4 line again, and so equities are recovering. It was like they're all like, okay, false alarm, we don't have to worry about it anymore. Try not to rely on indicators, more of a reference from a snapshot. Well, I mean, nice view of correlation between delta momentum and the super smoother. Wait, what are you getting delta momentum from? That's just another indicator. I was thinking about that the other day, John, and I was thinking maybe it would be better if you were to say how many bars in a row it's been moving up, you know what I mean? But that would probably just give us something similar to directional index. I don't know. I'm not quite sure why that one performs the way that it did. Did you see the one I sent you on Discord? That was the gap thing. That was kind of interesting. There hasn't been any gaps today, though. Yeah, let's come back and change this back to 50 and see if it gives us anything. So there was definitely that move back there that I think should have triggered it. If prices rotate back in relation to value in normal markets, why wouldn't it in financial ones? Well, the issue is that, like, it's the fat tails thing, right? Like, usually it does, but sometimes it doesn't. And when it doesn't, it really, really doesn't. And then you get this really bad losing streak that makes no sense. And fat tails can be countered with risk management? Not quite. So here's where that kind of falls apart. So you can come in and you can say, okay, there's going to be a place where it doesn't work, and when it doesn't work really, really badly. And so, hey, it's fine. It's just that one trade. You have risk management. You stop out of it, and it's fine, right? The problem is that when you're in that market condition, you tend to be in that market condition for a while, and you might not necessarily know that you're in that market condition, right? So what ends up happening is you take the trade over and over and over again and get it wrong over and over and over again, right? And then you kind of have to come in and say, okay, well, I have a max daily limit, I have a monthly limit, that sort of a thing. Yeah, that helps. But how much do you lose before you get to that point? And, it's kind of difficult. Okay. So when I did that, when I changed it back to 50, it gave me a couple. In exactly the places that we want to. Well, that means maybe we're going to have do you think that maybe we'll have a measured move for the way we went from 60 to 80, so back up to 3,900? You need to be able to, there you go. See, but that's the problem is like, very often when a strategy is not working, I can't figure out why or what you can look at to identify that we're in that condition, There's volatility. But like, let's just say that you got a trending strategy, right? Well, a trending strategy can get hurt by volatility, but it can also get hurt by mean reverting market. It can also be hurt by it just doesn't react to your signal very well for whatever reason. So it's like, it could be that the market looks entirely like something that should be good for you, and it's just terrible and you don't know why. And I've had these things where I'll go through, like, I'll do that analysis that I just did. So that analysis that we got there is essentially trying to increase the win rate of the strategy by looking at the value of different filters to see if there is a threshold based on the distribution where it makes sense to filter it. And when we look at it today, it's not helpful because it's been bid the whole morning. So you would only take longs. And you'd get 60% of them. I guess it would be enough that you would make money, but it's not very good. With 10-hour trades, you can survive until it gets better again, maybe. Yeah, I mean, with that one, you can lose so many times in a row, I guess. Assuming that you have a large enough one. What's your thought on trailing stop? Well, I'm sure that there are some strategies that work really well with trailing stops, but I'm going to bet that they're very short-term in nature. So I've had a really difficult time getting them to work for anything, because the market's tendency is going to be that it's going to move up 16 ticks, and then it's going to come down 12 ticks, and it's going to move back up 16 ticks. And so it's like, okay, if you have a trailing stop that's 16 ticks, then I guess that would work. But then when you get a move that's like 32 ticks, then it screws you. So every time that I've back tested it, the trailing stop reduced profits, essentially. So I think it makes a lot more sense to just know, based on what you're looking at, how far it's likely to go. I think I want to do some stuff with these where, I can look at how many contracts. I've tried doing this before, but maybe I have some different ways of doing it. If the cumulative delta has changed by this much, then I want to get out, or whatever the deal is, I trade without stops and I always hear you definitely shouldn't do that. You absolutely always have to have an emergency stop in futures. Okay. Like, just as an example, I have had situations where I was sitting and on live trades where I was sitting in a trade in the 10-year Treasury, and it literally moved like over 20 ticks all at once. And, you know, that's like $300 per contract. So, and I've seen worse in E-minis, right? So I thought you said, and I didn't say stops didn't work. I said trailing stops don't work very well. There's probably a very specific type of momentum strategy where they work. But no stop, that's dumb. like straight up, it's dumb to trade without some sort of a stop. You should always have an emergency stop. Even if you're doing one of those strategies where your average winner is going to be smaller than your average loser and all of that sort of a thing, you need to have an emergency stop somewhere. It might be something that's like almost will never get hit, but you need to have it somewhere. Otherwise, you can just lose so much on one trade. It will maybe happen once a year, but you don't want it to happen. Don't need that. So I wish I had this on this. So here, I'll just show you. I wish I had it like on this the whole time, but you could kind of see how going back, it didn't really. I can't see going back far enough, but it was bid this whole time, and it was only until now that it's changed for whatever reason. Another thing, you know what? It's probably not a very good setup, man. I don't know how to do this. So one of the issues is that the strategy takes a lot less trades than the number of data points that I get. So it'll get in a trade, and then other data points will come along while it's in that trade. And so I don't get to see if those other data points would have been winners or losers. You get what I mean? So I can't tell if I ignored these short ones, then I would have gotten along just after that would have been better. That's why I wanted to have it like a bunch of different ones. Now I'm thinking what I need to do is I need to just, maybe I can only do 2 at a time or something like that. Maybe if we only had 2 of them running, that would be okay. Yeah, let's do that tomorrow. How many Rhythmic Trader Pro instances can we open at a time? I mean, you can only have 1 instance of Rhythmic Trader Pro itself open at a time, just 1. But then I don't think that there's a limit to the number of things that you can plug into it. If there is a limit, I'm not aware of it. I tend to lose my ability to think when it goes against me. I think that we tend to lose our ability to think when we're in a trade period. Like, if it's not like premeditated, it's really hard. That's why I think that one of the things that's been helping me out a lot lately is that I heed the large meta orders a lot more. That has really helped me. I'm in a trade and I'm winning and I've made like 8 ticks on it, and then all of a sudden I see a large meta order equal to the other way. I'm just get out right there. That's why I had to learn to completely disregard the price I got in it. That is what I need to learn to do. I traded on such a small account for so long, it's like day one all over again every day. Can you go deeper into identifying meta orders later on or maybe tomorrow? Well, so I mean, there's not like any one thing, right? It's just like, can you sit down and you, when you're watching the flow, and say, all of this volume right here was related? That's kind of what I'm getting at. Is like, if I'm moving up and then they hit a price, and all of a sudden at that price there is a clear reaction the other direction. There's an iceberg order absorbing there, or there's just a rush of volume that pushes it down, whatever it is. And I look at the volume and I compare it to the past events that I've seen like that. To me, a meta order becomes an associated set of orders. So like, the thing that's cool about it, and here's how you can apply it, is that when you go and you look at the empirical studies that have been done, they're always about not always, but the most popular topic that they research about is the impact of large meta orders. And why do they do that? Because they're trying to help large institutions execute more efficiently, right? To us, the difference between linear and square root impact is like negligible. It doesn't matter. That's why like the Kyle model is an acceptable way of looking at it, right? But for a large institution, it's like millions of dollars a year. So they have all of this research about it. And it's with the intention of, you're an institution, you're executing a large order. What's the most efficient way to do it? But you as a retail trader, you don't have to know that all of those lots were all from the same person, right? You can just be looking at it and know that, that was all of that volume was being traded for the same reason. You get what I mean? So like, here is an example. If we come back over here, right? We're moving up pretty aggressively in the S&P 500. Wouldn't you say? Oh my gosh, I just like totally crashed NinjaTrader there, I think. Okay, we had this move up, and then we had another move up. Do you think they're related? Seems to me like probably they are. Because this is the meta order of people buying the S&P 500 because the bonds have backed off. Right? So I can call that a meta order. And, determine things about it from that. I'm gonna have to kill Ninja here, I guess, because I couldn't handle making the chart bigger. That's weird. getting near the overnight. You think that they'll have trouble there? What's the indicator on the chart in the back? I have to go back. Well, they either move past it or bounce off of it. That's not enough. Well, you kind of got to be careful about the concentrating bit, because when you're concentrating and you're afraid, it kind of affects your logic, right? But there again, that's why it's like you've got to know what you're looking for, you know? So that's where I'm just saying that based on what we know about market microstructure, you know, if you got in and there's a large meta order came in and picked you up and you know, after that the market started moving up, then when you see a meta order of equal size on the other direction, I used to sit down and think, well, okay, it's equal, so it might not be a big deal. Maybe they'll push through it. But what I've realized now is that because of the sign change, that it's actually likely to go beyond where you got in at. So that's the other thing, is you're like, well, I can wait, it'll pull back and I can get in again and all this stuff. No, like, you should get out then, let it come all the way back, and then if you say it's still bullish, then you buy it. So let me make sure that I've just got all this stuff set up correctly, because I changed a few things, right? Bum, 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 bum. Add J on there. Use max. HFT. Enabled. Okay. Okay, so which indicator were you asking about? Who was it that was asking? Man, you guys have been saying a lot. Wine tube. Which indicator are you talking about? Which chart on this screen are you talking about? Is there any kind of tax? I don't think so. I don't think that they really. Now, if your broker tracks orders, then that's a thing. But I don't think that most of the retail trader ones that actually do that at the moment. You're just talking about this thing? Because there's a lot on there. Which thing on this chart are you talking about? This is what I wanted to have. So what I wanted to be able to pull up was to be able to say, here's a meta order right here. Probably. Well, what was the volume on it? Okay. 5,000 contracts? 3,000 contracts. Betcha there's probably another little pullback and another little move up. You just want to know what all of them are? Okay. So the lines, like the blue and orange lines, are the inventory cost bases, which essentially show you where major market players are long and short from. So the buyers, their average buy position has moved up to 38.80. Okay. So buyers are in control. Buyers are making money. Shorts are not. And once we get beyond this little dotted line, then the shorts are all losing money. Like they've lost all of the money that they might have made in through here. So that's kind of how we play with that. And what I tend to want to do is, under certain circumstances, when we break it above this, break through these lines, I want to take a trade in that direction is how I do it. So that's basically what Brandon does. Although he knows conditions. But that is an indicator that you get from speculators.com. The squares is a new thing where there was a slip there. Basically, they traded through a price and like less than 50 contracts traded. So you can see it doesn't happen very often. But it does happen through multiple prices. That one's not available yet, but I do think that I will add that into the indicator package because it seems pretty useful. And then down below, you've got cumulative delta, which is just market buys minus market sells. And then this is just another view of the inventory cost basis where I'm looking to see how many contracts overall they actually have on. Right? I have to fight the gambler inside me that wants to be in a trade, any trade, even a bad trade all the time. Yeah. Well, that's me, especially when it's moving, man. It's moving like it was before the open. I mean, that was tough action, and I really should have just been going short the E-mini like right away at like 38.85 and trying to ride it. But whatever. I caught a good short there on the open. That was a good short, and I got out of it in a good spot too. We'll make $100 a day. Well, no, she'll probably make $10 a day because she's probably going to trade the micro, right? Well, it's almost time to get going. Well, I'm still bummed about my headphones not working. Yeah, I just wish I knew why the numbers come out the way they did on that thing. But we're going to run both of them tomorrow. We're going to run it twice. Maybe I should come in and consolidate some things, because I got a lot going on, and it does seem like in fast market action. So, like, I don't think that I need the inventory cost basis on all of the treasuries. Probably let's just do it on the 10-year. The 10-year and the E-mini. I guess they all have to have tick replay on, and that's the thing that's actually expensive. But it's just having that tick replay on the E-mini like 5 times is a problem. I could take this off. No, that wouldn't make a difference either. I don't know. This chart over here doesn't have... I'm gonna need to go look at some of my algorithms again. I was really excited to go and do that analysis and see what we could do with J, and what I need, what's the best way to handle the level 2, but it's not really telling me what I want. So we'll see, but today was an okay day. Treasuries reach 1.4% yield. That should be like the piece of information everybody's like, oh, I want to watch that. I didn't even want to know the guy that knows bonds and what he thought about all of that, but probably none of them even know. Did you notice that when the market opened, like Tesla in particular just kind of like flat out ignored it? Tesla up 4% today. ARK break even. Oh, silver's doing really, really well today. Someone's doing really, really well today. I make money today? I did. Ooh, I made even more money than I lost the other day. That's good. You know what? I tell you, I'm pretty happy with that silver position, by the way. So everybody was poo-pooing it, but it's done really well. I probably should have put more money into it, frankly. All right, guys. I know that there's probably a bunch of stuff. I feel bad today because I wasn't completely in line with everything that you guys were saying. But part of me was like, you know, just kind of focusing on the thing and ignoring chat, which I think works well when I need to. So I'll see you guys tomorrow, though. Should be good. Ooh, and my medication should come today, so I should feel a lot better tomorrow. And I have a bunch of stuff to backtest here from Blunt, I think. So I'll catch you guys tomorrow. In the meantime, stay profitable, friends.